called, and I was waiting to try and vote, which I did. So for those of you who haven't voted yet, know that the first vote is underway. And we will interrupt at some point and take turns, Senator Ernst and I, to go do the second vote. So at this point, the Senate Committee on Small Business and Entrepreneurship will come to order. It's an honor to welcome you all here today to this hearing on the unique challenges that rural small business owners face and those federal efforts to help them succeed. I want to thank all of our witnesses who are here today. We will introduce you more formally in a few minutes. But rural small businesses are the backbone of their communities. They provide jobs and essential services. There are over 4 million rural small businesses employing 7.5 million people in the U.S., according to a 2024 report from the SBA's Office of Advocacy. That's more than 56% of all employees in rural areas. Rural entrepreneurs start businesses at higher rates than their urban counterparts. Their firms are highly resilient, and their 5-year survival rates outpace that of small businesses in urban areas. However, rural small business owners do face unique challenges. In a survey by the Small Business Majority, rural small business owners identified several key challenges hindering their growth. The challenges include limited access to capital and technical assistance, difficulty maintaining a qualified workforce, poor proximity to broadband services, and a shortage of healthcare providers in their communities. I also frequently hear in New Hampshire about issues related to the availability of housing and childcare, very big issues in our state. These challenges are compounded by a lack of coordination between local, state, and federal governments and relevant stakeholders. In order to break down these barriers for rural small business owners, it will take a coordinated effort. That's why the United States Department of Agriculture, USDA, and the SBA took a step in the right direction through the extension of a Memorandum of Understanding, an MOU, between the agencies in 2023. The MOU increases collaboration between the two agencies to collectively address gaps in capital access, contracting opportunities, and entrepreneurial development resources for rural small business. The MOU and Rural Partners Network demonstrate that collaboration between the federal government and local communities can better tailor solutions to the specific needs of rural areas. Through continued congressional support, we can enhance the effectiveness of these programs. By working together, we can empower rural small business owners to contribute significantly to their communities and strengthen our economy. Again, thank you all for joining us today. I want to yield to the ranking member for her opening statement. I will submit my full statement for the record, and I will come back to introduce the witnesses in a few minutes. Senator Ernst.
Thank you very much to our chairwoman, and thanks to each of you for being with us today. We really look forward to your testimony. Small businesses are the lifeblood of rural America, where they account for nearly 85% of all companies and over 50% of all jobs. I know rural America firsthand. I grew up on a farm in Montgomery County, Iowa, where I still live today. My parents and my neighbors ran small businesses, and I learned just how essential they were to local communities and our state's economy. Today, we are here to discuss how the federal government can put rural small businesses on the same footing as those in our cities and urban centers. The Biden-Harris administration has left rural small businesses on life support. Prices are up over 20% since President Biden and Vice President Harris took office. Inflation, caused by the Democrats' Orwellian-named Inflation Reduction Act and America Rescue Plan, is out of control. As if that wasn't enough, the Biden-Harris administration has hit small businesses with more than $1.6 trillion in regulatory costs. As I travel from river to river across Iowa, rural folks continue to tell me they think the Biden and Harris administration just doesn't understand or doesn't care about their needs. When my state was hit with natural disasters earlier this year, it became evident to me why they thought so. I was on the ground after each of these disasters and heard firsthand from Iowans about the difficulties they had in navigating recovery efforts. I heard from folks whose insurance couldn't cover the full repair or replacement of homes, businesses, or equipment because reckless Washington spending has made everything more expensive. Even though they did the right thing and put money away in case of emergency, hyperinflation meant it just wasn't enough. FEMA and SBA did quickly set up recovery centers, and I want to thank them for that. But business owners were left frustrated by the two agencies' lack of coordination and competence. For example, Iowans received conflicting information about eligibility and application process. In Shelby County, which was hit by tornadoes in the spring, SBA provided outdated and completely wrong information, including sending disaster victims to a dead website. They didn't even realize they were doing so until my staff brought this to their attention. And this is absolutely unacceptable. But even in the face of such gross incompetence, Iowans weren't deterred. The private sector and Governor Reynolds have stepped up to help rural small businesses where the federal government has failed. State programs like Iowa Works are helping folks who have lost their job or businesses due to the disasters. Our community banks are also playing a crucial role. Many are offering loans to rural small business owners with better rates and faster approval times than their federal counterparts. I'm proud of Iowans for coming together and doing what the Biden-Harris administration seemingly can't. Small business owners who lose their livelihoods in a natural disaster have no time to spare. It's incredibly frustrating to repeatedly hear from those seeking SBA assistance that they thought it was a waste of their time, so much so that many walked away and didn't complete applications. For those who stuck it out, SBA loan processing times were incredibly slow. It becomes even more challenging when you consider the fragmentation among federal agencies. A variety of resources are available after a disaster, including loans from SBA and USDA, but there is no parity between the two agencies. When issuing SBA loans to underserved and minority borrowers in urban areas in 2021, the Biden-Harris administration insisted their policy to waive payments and interest accrual wouldn't cost anything. But today, when it comes to farmers in rural America, the Biden-Harris administration insists it needs an act of Congress and more money to extend the same terms. How does that make sense? Either the administration has been dishonest about the cost of its SBA policies, or it doesn't think rural business owners are worthy of the same benefits as their urban counterparts. Simply put, the Biden-Harris administration, in particular the SBA, is leaving these communities behind. SBA's lending in rural areas is abysmal at just around 15% in the agency's two main programs. If SBA lending to rural communities had been in line with population, there would be an extra $1.3 billion a year available to rural entrepreneurs. But instead of channeling this much-needed capital to American entrepreneurs, the Biden-Harris administration has chosen to focus on enhancing its loan programs for favored priorities like green lending, which overwhelmingly benefits Chinese manufacturers. That's a slap in the face to hardworking Americans who are the ones paying for these programs. The Biden-Harris team must stop picking winners and losers and make this assistance accessible to all Americans. I look forward to hearing from our witnesses today to see how they have worked to help rural small businesses and to understand what improvements our federal programs need. Finally, I ask unanimous consent to enter into the record a letter Governor Reynolds and the entire Iowa congressional delegation sent to Secretary Vilsack in July 2024 urging parity amongst SBA and USDA's direct disaster loan programs.
Without objection.
Thank you. And with that, I'll conclude.
Thank you, Senator Ernst. And again, thank you to our witnesses for being here today. Let me begin by introducing Ms. Cara Lank, who is the Senior Vice President of Stone Bank, which operates as both a USDA and SBA lender. She is also the chair of the Government Relations Committee for the National Rural Lenders Association. Ms. Lank helps countless rural entrepreneurs start and grow their business. I'm looking forward to hearing your testimony and learning from your perspective as a lender. Mr. Zachary Luse is the founder and CEO of Paragon Digital Marketing, based in Keene, New Hampshire. He founded the business in 2012 and has more than 2 decades of experience in his field. Mr. Luse has firsthand experience navigating the complex landscape of federal programs, including those administered by SBA and the USDA. So I will now turn it over to Senator Ernst to introduce our other 2 witnesses.
Great, thank you, and welcome Ms. Lank and Mr. Luce, and thank you for joining us again. And I want to introduce the rest of our witnesses who are testifying today, and I'm proud that 2 fellow Iowans have joined us here in Washington, D.C. to share with the committee how we can empower our rural communities. So first is Mr. Grant Menke. Grant, it is wonderful to have you here. Grant serves as the Deputy Secretary of Agriculture for the Iowa Department of Agriculture and Land Stewardship. Previously, Mr. Menke served as Vice President of Market Development for Iowa Corn. Prior to that, Mr. Menke served as the State Director of Rural Development for the United States Department of Agriculture in Iowa. He earned a bachelor's degree from the University of Northern Iowa. Next is Mr. Verlin, and as we know him, Gus Barker. And Gus is President and CEO of First Community Bank in Rockwell City, Pomeroy, Fonda, and Newell, Iowa. He is testifying today on behalf of the Independent Community Bankers of America, where he also serves as the chairman of their Agriculture and Rural Committee. Mr. Barker earned a bachelor's degree from Buena Vista University and graduated from the Graduate School of Banking in Madison, Wisconsin. Gus, thank you so much for being here today. Thank you.
Thank you, Senator Ernst. Ms. Lank, would you like to begin? And we will go right down the line.
Chairman Shaheen, Ranking Member Ernst, and members of the committee, thank you for allowing me to participate.
Can you make sure that your mic is open and that it's close so that we can hear you?
That better?
Much better.
Okay. Thank you for allowing me to participate today. My name is Cara, Lank, and I'm the Chief Credit Officer for Stone Bank, which is an $815 million community bank based in Arkansas. We currently make SBA 7A loans, FSA loans, USDA loans under Business and Industry and Rural Energy for America programs. I have unique insight to work with rural businesses because I grew up in rural America. My grandparents were farmers. My grandmother started her own small business by converting an old house into a grocery store that was in the middle of nowhere. She was very successful, and she built a larger store later. The store was surrounded by soybean and rice fields. In addition to my role at Stone Bank, I am the chairman of the Government Relations Committee, for the National Rural Lenders Association. You can find more information on NRLA in my written statement. Stone Bank has experience in closing USDA SBA combo loans. However, there are key differences between the 2 most popular programs, which are SBA 7A and USDA's B&I. Both programs can assist in providing capital for the same project with B&I loan guarantees of up to $25 million and SBA loan guarantees of up to $5 million. While there are some synergies between the programs, challenges exist as the underwriting standards and organizational structure of the 2 agencies vary significantly. I could provide more lengthy details, but to keep it brief, I will note that SBA has a PLP, Preferred Lender Program. PLP lenders are awarded the authority from their proven track record to complete the processing and ultimate final approval, and as a result, loans can move through the process very fast. SBA is also more streamlined because they use technology in the form of their E-Trans system, which allows the lender to enter pertinent loan information, which checks eligibility requirements. USDA has no PLP program and no such technology. Regardless of lender history and performance, USDA requires all lenders to submit an entire underwriting packet, which is individually reviewed by staff specialists in what is commonly viewed as re-underwriting the loan, since the specialist is required to create their own project evaluation. Every USDA loan requires a credit decision that goes through several levels of review and is a very manual process. This causes significant time delays and is not responsive to the speed of business. USDA projects require very patient borrowers and lenders, as most loans take from 9 months to 1 year for processing and approval, as opposed to a 90-day turnaround for an SBA loan. USDA construction loans require extensive environmental studies, which can take months to complete and are often very costly. SBA has very few environmental requirements. There is also a mismatch in funding in that SBA has a $30 billion budget, while B&I budget authority is significantly less at a current level of $1.6 billion. NRLA has been attempting to cure this mismatch and forecasted demand for the B&I program to be $2.7 billion for FY 2024. As of September 2024, USDA had obligated $1.62 billion in loans, with approximately $1.16 billion in pending requests for a total of $2.78. Currently, we are seeing similar demand for FY 2025. Turning to the SBA-USDA Memorandum of Understanding, it aims to coordinate activities among the two agencies to expand credit opportunities for rural small business. To meet this goal, the two agencies should use similar systems for loan application submission. While the criteria for loans for each program is different, the basic underwriting process for the lenders is the same. We believe this action would decrease USDA staff time, eliminate layers of approval, and significantly reduce operating costs. Separately, USDA should consider a PLP-type program. SBA's process allows for loans to be issued throughout the U.S. and reduces individual inspection of loan applicant eligibility. Additionally, activities that need to be expanded are sponsored webinars with SBA and USDA staff. Many USDA offices have held webinars with SBA state offices to educate lenders about the two programs and give examples of how they can work together. This activity should be encouraged with consistent educational sessions across the country. There is much more in my written statement, but NRLA, Stonebank, and I thank you for the opportunity to participate today, and I'm happy to respond to any questions.
Thank you very much. Mr. Menke.
Well, good afternoon, Chair Shaheen, Ranking Member Ernst, and members of the committee, and thank you very much for the opportunity to testify today. My name is Grant Menke, and I serve as the Deputy Secretary of Agriculture for the state of Iowa. I'm here today on behalf of Iowa Secretary of Agriculture Mike Nag, who is currently on a trade mission to India with Iowa Governor Kim Reynolds. He wishes he could be here, but I am pleased to share his perspective and that of numerous Iowans in the ag community who have spent the last few months recovering from devastating and costly natural disasters. Agriculture drives the economy of Iowa. It is our #1 industry. Consumers near and far depend on the productivity of Iowa agriculture, and our multi-generational family farms and ag businesses are proud of this fact. Unfortunately, many family farms were devastated by a series of weather disasters earlier this year. While our historic drought of 204 consecutive weeks was busted, this growing season unfortunately produced historic flooding and a record number of tornadoes in Iowa. Secretary Nag spent many days on the road this spring and summer visiting farms, businesses, and communities that were hit hard. In many cases, these folks lost nearly everything, not just farm buildings and equipment, but also their homes. Secretary Nag relayed the story of a man from a Century farm in southwest Iowa. This farm had been in his family for more than 100 years, and they lost everything in a tornado. This farmer was clearly feeling the pressure and responsibility for his farm and the legacy it represents. He was thinking of generations past, but also of generations to come. Despite his world being turned upside down, he relayed to Secretary Nag his determination to turn the page, rebuild, and start the next chapter of his family farm story. But as these farms have moved forward, they've encountered challenges. Like any small businesses with significant equipment, infrastructure, and operating costs, these farms carry property and casualty insurance. They also rely on risk management programs authorized through the Farm Bill, including crop insurance. Yet there are still significant gaps, especially during this time of persistent inflation. That's why farmers and farm businesses have needed to turn to disaster programs offered by USDA and SBA to access the capital needed to continue operations. Through this disaster recovery process, Iowans have discovered several frustrating and confusing disparities between these programs, and it is our hope that this committee can begin the process of addressing these inequities. In addition to the overall complexity of these programs, one of the most significant issues Iowans have faced is the disparity in accessibility and eligibility between USDA and SBA disaster programs. Since farmers are not eligible for SBA disaster programs, these differences have hit farm families especially hard. For instance, SBA disaster loans typically offer more favorable terms, including higher loan limits, lower interest rates, and longer repayment terms than USDA disaster loans. SBA disaster loans also offer deferral of the first payment and no interest accrual for the first 12 months, features that are not available with USDA disaster loans. These discrepancies place an undue burden on farmers and farm businesses who already operate on thin margins, especially during the softening ag economy. To address these inequities going forward, we encourage you to align the eligibility criteria, loan limits, terms and conditions for SBA and USDA disaster programs to ensure that all affected farmers and farm businesses can access the support they need. Due to gaps in the current USDA disaster programs, the state of Iowa has already taken action to give agriculture some immediate relief. The new Disaster Recovery Farm Interest Program, announced by Governor Reynolds on July 11th, offers farm businesses up to $50,000 of reimbursement for 1 year of scheduled interest payments owed on eligible loans used to repair or replace damage on insured property. This program essentially aims to align emergency loans with the same 1 year deferred interest financing offered by SBA. A similar solution is needed at USDA to ensure that assistance is available for farmers in Iowa and other states facing similar hardships. We should all be inspired by the optimism, determination, and fortitude of the farmers and farm businesses in Iowa and around the country who have weathered these storms and natural disasters. Family farms are key to the vitality of our rural communities and essential to making the U.S. a global ag production powerhouse. Through common sense reforms to USDA and SBA disaster programs, we can assure that impacted farms receive the help they need to recover, rebuild, and write the next chapter of their family farm's legacy, which will ultimately contribute to the greater story of U.S. agriculture. Thank you for your time, and I look forward to your questions.
Thank you very much. Mr. Luse.
Thank you, Chairwoman Shaheen, Ranking Member Ernst, and the rest of the committee. It's an honor to share my story of entrepreneurship in rural America and my experience working with government agencies to grow my business. I grew up in a small town of DeWitt, Iowa, where entrepreneurship was part of my life from an early age. I started my first business in the 3rd grade, building and selling wood benches out of my dad's photography studio. In 2010, I ended up in Keene, New Hampshire, and turned my side hustle into Paragon Digital Marketing, a company that was focused on helping mid to small-sized businesses grow. Starting a company that provides its services over the internet came with challenges in a rural area where access to broadband is limited. Chairwoman Shaheen, I greatly appreciate your work on this issue. Thank you. As Paragon grew, the need for a larger office space with broadband was a major challenge. In 2018, I bought a vacant church listed on the National Historic Register. I had no idea how much work was ahead of me, but after a lot of Googling and calls and emails, I found technical assistance through my state's Community Development Finance Authority, a CDFA, to secure a low-interest loan using federal ARA dollars to finance a solar array on the roof of the building. Additional funding for my project came from my local bank and the New Hampshire Business Finance Authority. The process of working with the various organizations and navigating their different requirements was challenging, and I doubt I would have completed this project without the assistance of the CDFA. In 2020, we moved into our new space amid the uncertainty of a pandemic. A PPP and EIDL loans from the SBA were crucial to continued success of Paragon. The solar array now produces all the energy we need for heating and cooling our business, and it makes our business stronger and more resilient. When energy costs spike like they did a couple years ago, it didn't impact our business at all. My entrepreneurial journey continues with a new venture. I'm opening a beer garden in the sanctuary of the old church upstairs. For this project, I'm applying for a USDA REAP grant that's due at the end of the month to install a geothermal heating system to replace the large oil boiler that currently heats the space. Clean Energy New Hampshire is providing technical assistance for this USDA grant, which is extremely helpful. I'm also considering a New Hampshire Department of Energy grant, but the grant is on a completely different timeline and completely different process. Along with long approval times for both of the USDA and the NH Department of Energy grants, opening this business will definitely be delayed. Recently, I completed the New Hampshire Export Accelerator, where the New Hampshire Small Business Development Center, or the SBDC, brought together the U.S. Commercial Service, SBA, New Hampshire's Office of International Commerce. With advisors from the SBDC, I developed a plan to export Paragon services. I've been awarded a STEP grant and embark on my trade mission to Brazil next week. This is a great example of bringing together resources from different agencies and helping businesses navigate them. It would have taken me a lot of time and research to connect with the people at each of these agencies and try to figure out how to utilize these services. This type of multi-agency coordination and assistance is critical for small businesses like mine. Enhanced coordination among federal programs that support small business is critical. Additional resources for rural businesses and organizations that support us, like the SBDCs, Clean Energy New Hampshire, the CDFAs, would be immensely helpful. We can spend less time navigating the landscape of federal resources and more time doing what we do best, running our businesses, creating jobs, building wealth for families in our communities, and growing the American economy. The New Hampshire SBDC has been a tremendous resource to me, assisting with PPP and EIDL loans and advising on various aspects of my business. Their guidance has been extremely invaluable. In my role as the trustee of the Savings Bank of Walpole, our community bank, I've seen firsthand the impact of SBA and USDA lending programs. One that stuck with me included two farmhands who with USDA support purchased the dairy farm that they worked on from the retiring owners. This would not have been possible without the backing of the USDA and their programs, and has changed the trajectory of their lives while keeping this dairy farm in production for years to come. I'm curious to learn more about potential synergies between USDA and SBA. In summary, my rural business would not be where it is today without the support of federal, state, and local programs that support us. As a rural business owner, I've faced unique challenges like limited access to broadband, lack of educational institutions with relevant programs in my area, fewer service providers to support my business, and more severe workforce shortages than you see in more urban areas. These programs make my business stronger and more resilient, but they often exist in silos that make it difficult to access and navigate them without help. Some ideas for improving coordination between federal agencies and making resources more accessible to small businesses would be more staff on the ground that serve as generalists, that connect and advise on the different programs that are available to small businesses. More programs like the New Hampshire's SBDC's Export Accelerator that bring together resources focused on solving specific problems for businesses. Quicker approvals. USDA REAP grants can take several months to get approved, and the timing and cycles of these programs don't always line up with real-world business needs. Both my projects involved spaces that had sat vacant, so I didn't have any heating history. So this disqualified me from many of the energy efficiency programs that are available. Exceptions for vacant spaces or adaptive reuses of spaces to use energy modeling or other methods to show energy savings would be very helpful as well. I appreciate all you do to support small businesses like mine, and thank you for the opportunity and privilege to share my story and insights today.
Thank you very much, Mr. Luse. Mr. Barker.
Chair Shaheen, Ranking Member Ernst, and members of the committee, I'm Gus Barker, President and CEO of First Community Bank, headquartered in Newell, Iowa. I testify today on behalf of the Independent Community Bankers of America, where I'm chair of the Rural America and Agriculture Committee and a member of the board. I thank you for convening today's hearing on the critical issue of support for rural small businesses. First Community Bank is a $115 million asset bank serving 4 rural communities in northwest Iowa. We specialize in agriculture lending of all types, rural small businesses, and 1 to 4 family homes. Now, in view of the recent flooding in northwest Iowa, I want to put a special focus on Community Bank's support for rural small businesses in the wake of natural disasters. In times of crisis, community banks demonstrate their true value by providing critical resources, counsel, and comfort in their communities. I'm grateful for the opportunity to share the community bank perspective on this important topic. Iowans have repeatedly proven their strength and resilience in the wake of natural disasters. As a 47-year Iowa community banker, I've lived through the Great Flood of 1993, one of the most destructive floods in recent memory. Like other Midwestern states, Iowa has experienced tornadoes and droughts, which have laid waste to our most precious economic resource, our crops and livestock. In June of this year, severe flooding in Rock Valley caused significant damage from which that local region is still recovering. Experience has convinced me that the best solutions are local. Community banks have always been on the front lines of disaster recovery efforts in Iowa, and I'm proud that local families, farms, and small businesses have turned to me in their time of need. Now, federal programs will never displace local community banks, which are always ready to provide vital resources promptly and without bureaucratic obstacles. SBA direct lending and other federal disaster recovery programs have always played a critical role in the survival of disaster-stricken businesses. Unfortunately, these programs are mired in bureaucratic red tape. Disaster victims are in no position to complete that excessive paperwork. My written statement contains an example from the historic flooding of '93 in which I helped a customer with the daunting paperwork of an SBA application. We could not have completed that application without the support of the local SBA office. Regrettably, since that time, SBA scaled back its presence in Iowa, and applications are now approved in San Francisco, a distance that makes coordination much more challenging. Given the significant hurdles of obtaining agency relief, Iowa disaster victims often turn to their local community bank. Following the catastrophic flooding of 2008, it was clear that support from SBA and FEMA would not be enough to support the recovery and that it would come too slowly. My bank joined efforts with 2 other local banks to promptly extend some 50 loans to impacted businesses and families, which I'm happy to report were repaid with no delinquencies. In fact, I've extended loans at a discounted rate in a number of natural disasters. Disaster lending of this type takes patience and understanding from bankers and regulators to allow for this recovery. But this is very much a core part of our mission of community service. My written statement contains several suggestions for improved coordination among the agencies and with private lenders in disaster recovery, which I'll briefly describe for you. First, SBA is known to file liens far in excess of the loan amount to secure their mortgages. These liens tie up their collateral and prevent a community bank from helping the borrower in any way in the future. SBA should be willing to subordinate their loans in the way that USDA has, for example. Second, a disaster victim should have the option of packaging benefits offered by different agencies, such as a FEMA grant and an SBA loan, neither of which is adequate in itself for the rebuilding. Today, a victim must choose one or the other. It's too much to ask of disaster victims to learn the details of those competing programs and make an informed judgment of what to do. Thank you again for raising the profile of a critical issue for Iowa and the nation. Community banks have a vested interest in the prosperity of their communities and are always ready to help in disaster recovery. I'm happy to take any questions you may have.
Thank you very much, Mr. Barker, and to each of you for your testimony. Normally what we would do is I would ask questions, then I would turn to Ranking Member Ernst to ask questions, and we would go back and forth between both sides of the dais here for questions. But Senator Ernst is going to vote, so she is going to turn over her time to Mr. Budd, and I'm going to turn over my time to Ms. Rosen because she has to leave. So, Ms. Rosen, Senator Rosen.
Thank you, Chairman Shaheen, Ranking Member Ernst. We really appreciate it, and thank you to the witnesses for being here today and for your care and for your really smart, creative, and thoughtful testimony and really ideas of how we can make a difference. So I want to talk. I'm just going to ask one question because I know we all are in votes. We've got a lot going on, so I'll take good use of my time. I want to talk about bridging the digital divide. You know, Nevada, we have deep rural frontier, mountainous state. It's very hard to get there, and it's really an issue for us. So in 2023, online sales in the U.S. reached over $1.1 trillion, representing nearly a quarter of total retail sales. And one of the key drivers that supports this expanding, all of this in the marketplace, is the emergence of digital trade and e-commerce platforms that enable entrepreneurs to reach markets, right? Maybe employees, whatever those are, to work for you even remotely. And a lot of these have been previously beyond your reach. So, however, lack of reliable internet connectivity in rural areas can really hinder and hurt our rural businesses' ability to utilize any of these tools, any of the resources. Your programs now are approved in San Francisco. You need to be able to get online to do all of that. It makes it much more difficult. And a 2022 study found that nearly a fifth of rural entrepreneurs lacked broadband access, which is one of the reasons I've been working so hard to increase high-speed internet access throughout rural Nevada, and I know everybody's working on it in their state. So, Mr. Luse, I'm going to take my one question and ask you, talk to me about the challenges of access to reliable internet connectivity, how it might be affecting you or others you know, rural small businesses, and how will it improve if we really give everybody, let's say, all the juice they need to be on the internet and do their jobs?
Yeah, great question. That is something I definitely struggled with my business. And as I grew and trying to find an office space that was big enough for us to grow into in our small city, I looked at all kinds of office spaces, and they either couldn't get fiber to them at the time, or the cost was just astronomical. I looked at one office space in a newer industrial park, and it was $28,000 to get fiber to that location,
Oh my.
which is just something small businesses can't afford. So that I think it takes the government and the utilities, the communications companies, building out that infrastructure for small businesses to level that playing field.
Broadband as a utility, just like electricity and water. And
Yeah. I mean, it's become that. Children need it for learning. Businesses need it for doing business, and I feel it should be treated as more of a utility these days because everyone should have equal access to broadband.
Well, thank you. I appreciate that. I'm going to yield my remaining time because we have votes and lots going on. Thank you.
Thank you, Senator Rosen. Senator Budd.
I thank the chair, and what fortuitous seating. I could ask my neighbor right here. So low seniority has its benefits sometimes. Ms. Lank and all of you, thank you for being here today. Could you elaborate? I picked up a few ideas from your testimony, and again, thank you for all of your testimony. But could you elaborate on the obstacles rural businesses face when seeking financing from community banks, and share how banks like yours in Arkansas have helped these businesses navigate hurdles to access capital?
Many businesses struggle to get the capital that they need, especially with USDA lending, because there's requirements. Are you buying a business? Are you expanding a business? Are you constructing a new building? So there's limits on each one of those. So that is a struggle that they have. Also, if it's a startup business, it's really hard to get a community bank to take a risk on a startup business. It's just the facts. So there's definitely some area for improvement on helping them get what they need to get things started. A lot of them will lack business plans and a plan from A to B and what they want to do. And as Mr. Luse referred to, the SBDC is very good at assisting people in creating their business plans and moving on from there.
Very good. Mr. Barker, anything that your bank has done that's unique to help these folks overcome access to capital problems?
We are in a similar position. It's tough to get capital for those new businesses, and we rely on that SBDC to help with those business plans. They rely on us on counsel and giving them advice, but it would sure be helpful if there were some programs available to help us with some of those inputs to get those loans approved and guaranteed.
Continue with you, Mr. Barker. Given that rural businesses sometimes face a lot of cash flow problems, whether that's a seasonal fluctuation, particularly agriculture, how have your financial institutions created new products or service to help meet those needs, especially where there's fluctuations?
I don't know if we've created new products, but you know, if something isn't broke, you don't have to fix it. So, you know, I go back 47 years. I've been doing a lot of the same things during disasters or during cash flow crisis, and it's patience. You have to stay with these folks, work out a plan. How are they going to fix what was broken? Figure out what that was. Maybe they make changes to their plan. Maybe they go into digital marketing. We have a lot of boutique dress shops now that are selling more online than they are in the storefronts right now. And so I think things change. We have to adapt, and we have to be ready to make any changes that we need to do for that.
Very good. Thank you. Ms. Lank, anything you want to add dealing with clients that have fluctuating businesses and how you would approach them? I guess you would put that in your modeling, in your underwriting.
Correct. We do have some businesses that have seasonality to them.
Sure.
And that's just something that we look at when we're underwriting the loan. And we try to sit down and work with them the best we can. We'll help them problem solve whatever, you know, they're struggling with. If they're struggling with capital, there's a couple of third party's not the right word. There's some options that we have specifically with USDA, but.
Understood. Thank you. So one of the things that has been a concern of mine and many of my colleagues for quite a while is overregulation. That's been a significant driver behind banking consolidation, which has reduced the number of local community banks and limited options for small business owners, particularly in rural areas. Over the past decade, the U.S. has seen more than a 30% decline in community banks, driven by factors including regulatory pressures and increased compliance costs, policies like the Dodd-Frank Act, and to some extent, anticipation of Basel III, have led to heightened capital reserve, risk management, and reporting requirements, which disproportionately impact smaller banks. Many have been forced to merge or close due to the inability to bear these costs. So the trend's particularly concerning in rural areas where community banks are often the lifeblood of the local economies, offering tailored loans for small businesses and agricultural ventures. With fewer small banks, rural entrepreneurs face greater challenges in accessing the capital they need. So how has consolidation driven by overregulation and other market forces, how has it affected the ability of rural businesses to secure loans, and what policies could help with this? Mr. Barker?
That's a big issue right now. All these new regulations that are hitting us hit the small banks harder than they do the big folks. I have 25 employees in 4 locations. I have to adhere to the same regulations that the big folks do in the metro areas of Iowa and on the east and west coasts. It comes down to the core processor charging for more data and things like that. The things that are coming, the rules, we're supposed to be gathering 80-some points of information for our loans. And in a large metro area, you can identify all those points of interest, and nobody will know who that business is. In a town of 500 or 1,000 in Iowa, you list those points of that business, they're going to know exactly who it was and what was going on with that business. It's an invasion of privacy in our world, and we think it's way off base. And if there's any way to stop that, we would really appreciate it. The other thing we're finding all across the United States, obviously, of course, there's a history of too big to fail. In the small bank, we tread lightly on everything to make sure we follow those rules. An example of the blatant disregard is happening right now in the case of check fraud. It's rampant out there. The big banks are ignoring the rules and will not respond to the small banks in Iowa, Alabama, If there's a return check that is supposed to be returned for processing, they just don't respond. They ignore it. And I've had my peers in Iowa have to hire an attorney to threaten legal action just to get them to respond for a simple transaction that should go through bookkeeping. But they don't care. It doesn't matter to them. But if we were to do that, we would have an exam that would be very criticized. That's just an example of what we find.
Very helpful. Chair, do I have time to allow Ms. Lank to elaborate on that same question? Yeah, thank you. Any thoughts on overregulation and how it disproportionately impacts a bank like yours?
What you don't know is I used to be a bank examiner.
So you talk about it from both sides.
Yeah. It is tough, especially as Mr. Barker mentioned, especially when you've got a small bank or you're in a really small town. It's hard to find talent and people that are educated in all of these regulations to be able to handle them all. You know, from what I know, everyone does the best they can. You know, I used to go in some banks and you could tell that they did not have any idea what you were talking about, but most of them did. Most of them did. So it's just, there's not a lot you can do. You've got to follow the rules. So you muddle through the best you can.
Yeah, understand. Thank you all for your time today, your testimony.
Mr. Barker, I bet if you called your senator, she could get somebody to respond to you.
Happy to help.
So in my introductory remarks, I referenced the MOU that SBA and USDA signed in 2023. It identified areas for potential collaboration, and as part of the MOU, the SBA, USDA, and FDIC, the alphabet soup of acronyms that we talk about here, host a joint regional economic development workshop series called Path to Prosperity. These workshops connect rural small businesses with government officials, lenders, service providers, and other stakeholders. We did a Small Business Committee hearing in New Hampshire last week, and it was on a different issue, but one of the things we did at the end of the hearing was to include a bunch of resource partners like those I just mentioned, the IRS, SBDCs, USDA, a number of state agencies, to be there to answer questions for small businesses who might have questions and not be sure how to navigate the federal apparatus. So I wonder if you could talk a little bit about how those kinds of workshops might help your business, Mr. Luse, and also, Mr. Menke, you served as state director for USDA Rural Development about the time that that MOU was signed. Can you speak to some of your experience on the ground coordinating the SBA and other agencies? And I'll ask you to go first, Mr. Luse, and then Mr. Menke.
Yeah, I think those programs are great for raising awareness and even knowing the programs exist. Like the example of the New Hampshire Export Accelerator that the SBDC put together. I had no idea that the U.S. Commercial Service would set up meetings for you with foreign companies and vet them. I had no idea there were STEP grants to help pay for trade missions or developing marketing materials and translations for going into foreign markets. So I think in that way, it really helps raise awareness for the programs and connect businesses to the people, that they actual humans, instead of like scouring websites trying to find information about these programs. The other thing I noticed in the Export Accelerator that was really great was there were, during some of the sessions, the Commercial Service, the SBA, the SBDC, and the State Trade Office were all on those webinars. And there were times when those agencies were asking each other more questions than the participants were about each other's programs. So they were learning from each other and figuring out ways that they could work together and how their programs could complement each other.
Yeah, no, I think that's a really important observation. One of the things that I enjoyed about the resource fair was that they were not just answering and talking to the small business owners who were there, but they were talking to each other, which sometimes we don't do as well as we should across all federal, state, and local agencies. Mr. Menke?
Well, in my time at Rural Development, we coordinated regularly with SBA and it was a KPI. It was a directive for us to do so. We did a lot of rural small business road shows where we would meet with lenders and economic development representatives in communities all across rural Iowa to share information on those loan programs and services available from USDA and SBA, and to help rural businesses start, grow, and expand, and just to continue to discuss economic development ideas to grow small businesses. And coordinating helped to cross-promote programs. We were required to refer a project to SBA at USDA. They were required to do the same thing. We were required to leverage a project together to have an SBA and USDA joint funded project. So those are things that we definitely did. The SBDCs were great to work with as well, and I think we need to continue expanding that coordination and collaboration to the state level as well. The more fluent we are in how these programs work, the more we can be ready to give assistance to rural small businesses every day, and especially when disasters occur, we've got to be ready to do better.
I agree with that completely. Ms. Lank, can you talk about things that you think some of our federal agencies ought to be thinking about as we try and get out the word to those companies that you see who come into your bank to look at how they can get help?
We were talking about this earlier, and that's a struggle. How do you market that? How do people in rural America find out what the offerings are? You know, so we've had people that called us, and we were talking to them about a USDA loan. They're like, we've never heard of this before. They had no idea. So we, obviously, when they get to us, we educate them the best we can. But as far as a small business owner, I mean, who are they going? Are they going to SBD? I cannot say that.
Yes, DCs.
I took the T out of it, and that's throwing me off. Sorry. So I mean, it's a challenge for sure.
Yeah,
Don't know that I have a great answer for that. So.
And of course, those outreach budgets are some of the first things that get cut on federal agencies. Senator Ernst.
Yes, thank you, Chairwoman. And we'll start with Mr. Menke, and thanks again for being here today. In your testimony, you touched on how inflation has created that gap for those that in insurance coverage, leading to the reliance on USDA and the SBA programs, those that were impacted by those storms earlier this year. The state of Iowa even had to create bridge funding for farmers to cover loan interest payments. You talked about how Governor Reynolds started this program. How has that program been received by Iowans, especially in our rural areas? And are there any other areas that the state has been able to fill in those gaps left behind by our federal programs?
Well, the Iowa Department of Agriculture and Land Stewardship does not run that new program, but I can tell you in our conversations with Governor Reynolds that the programs have been very well received, especially by the farming community. And again, that program offers up to $50,000 to reimburse 1 year of scheduled interest owed on a disaster loan. And this is important because what we've heard from farmers after the tornadoes and floods was frustration that deferred interest option was not available for disaster loan assistance. We know that the applicants for this program are dispersed well among the 29 disaster counties in the state of Iowa, and we expect an uptick in the usage of those programs once more insurance claims are settled. So, I mean, there are so many farms that have been affected by this, and I know you've spent a lot of time in Shelby County. We had 74 properties that were severely damaged or destroyed just in that county, including 48 homes, 75 grain bins, 16 livestock confinements, and 170 barns. So this type of assistance is very, very key, and that's why having parity between those loans would be very important. Two other programs that the state stood up were related to housing. One was to provide temporary housing for up to 6 months at no cost for eligible disaster survivors as they pursue long-term housing solutions. And the other was a disaster repair program to provide up to $50,000 for the repair of disaster-impacted homes that aren't covered, they're outside the scope of insurance or FEMA individual assistance. So the state of Iowa has definitely stepped up to fill some of those gaps.
Yeah, thank you so much for that. And spoke to a gentleman from the Iowa State Extension Service as well today, and they were talking extensively about how they can stand up just temporary housing in the meantime until they can mobilize contractors to even get into those areas to build. That's such a struggle right now. Mr. Barker, again, thanks for joining us. It's good to have you here. And in your testimony, you discussed how paperwork burdens and SBA's decision to move their loan approval authority to San Francisco in California and the coasts presents challenges for our rural areas. Can you discuss problems you face when interacting with SBA loan offices that don't truly understand who they are serving?
You know, this dates back a lot of years. When they moved that office, I had great success with SBA as a young baby banker, and they were wonderful to work with. I knew the loan officers that SBA had locally and could deal with that. The minute that switched and went out west, any application that I sent out there was delayed. I didn't have the same person to talk to. I had conflicting requests of what I needed to do. And I guess it was basically a major communication snafu. And from talking to my friends in Rock Valley, that's exactly what they're running up against in the disaster programs as well. I saw it in 2008 in the floods there. Total disconnect. There were multiple people giving multiple answers. They didn't match. And when we're out there, the bankers didn't know the disaster programs any better than the public, and we're trying to help, and we're just as lost as they are, and it did create much frustration that way.
Right, and I do know because we spoke to a number of constituents that had the SBA reps that came in. They had to come into the state of Iowa. They weren't local. They were providing bad and outdated information, which is absolutely unacceptable. You also mentioned that community banks can oftentimes provide better loan terms and less confusion than SBA. How do you manage that?
Well, they talk to us directly. We give them the same answer every time they come in. Our paperwork is standardized. We know exactly what they have to sign. The folks up in Rock Valley with the different people they're talking to get different requests for different forms from different people, and they don't match, and there's no rhyme or reason why they are, and then they're doing duplications of it, and it's just a confusing mess. Again, the communication issue is a mess. We can talk one-on-one. We give them guidance and help them through the process.
Yeah, thank you. Personal ownership and a sense of community. Very important. And do we have time to? Yes, Ms. Lank, thank you for being here. And I am concerned that federal agencies are removing field staff and replacing them with more bureaucrats in Washington. It goes back to some of the issues we've heard today. And that, of course, is wrapped up into some of the telework policies that exist here in D.C. In your testimony, you mentioned as part of SBA and USDA's MOU, more can be done to coordinate field staff. Can you discuss your experiences with the gaps in coordination and what can be done to better utilize federal field staff?
I believe that's one of the challenges that everyone has faced is having proper staff, having enough staff. Through COVID, it all just went crazy. One of the biggest differences, back to what Mr. Barker said, is if you're trying to find a person at SBA, you email 7A questions. You don't call. USDA, you've got people. You can pick up the phone. They have state offices that are staffed. You call them. You tell, like every time we have a new loan in a state we haven't worked in, that's the first thing we do. We pick up the phone. We call them. We introduce ourselves. Hey, this is our project. We would like to work with you, all the things. And a lot of times they'll give us really good advice. Also, if we need to, we can go to national office depending on the size of the loan with USDA. So the telework is a challenge. There's some people that are really good at it and some people that are really not, as you've probably seen yourself. So I mean, it's just so interesting to me how different they're set up. But finding a person and getting advice is kind of priceless.
Right, absolutely, it is. And final question for Mr. Luse. Thanks again for making the trip to DC. And in your testimony, you discussed the challenges rural businesses face accessing broadband. That is a big topic here in this committee and many others. Can you elaborate on the challenges and how you've seemed to overcome those?
Yeah, definitely a great question. I shared a little bit more earlier about my story with just trying to find an office space for my business.
Right.
It was a challenge, and we're in a small city. The office spaces I looked at, either we couldn't get fiber to them, or some of them, one was in a newer industrial park, it was $28,000 to get fiber to it. So it's just not feasible for a small business to be expected to outlay that kind of capital just to get good broadband. So it's crucial, and we really need it in rural areas to level the playing field with businesses in urban areas who have cheaper, easier access to those things.
But you were able to overcome that then. There are some programs that have connected your area.
Yeah, so the old church building I found that was sitting vacant for 10 years had fiber on the poles across the street. So that was part of the reason that motivated me to undertake this somewhat insane project of taking a 150-year-old church and turning it into an office and a beer garden.
Right. Well, good on you. Thanks so much. I appreciate that. Thank you. Thank you, Madam Chair.
I'm sure we'd all enjoy coming to visit the beer garden. Senator Hickenlooper.
Mr. Luse, I actually built a bunch of beer gardens, just for the record. I had the first brew pub in Colorado, and then we did one in Omaha and Des Moines and Green Bay and all around. Some of them pretty small, maybe not exactly rural communities. The challenges that small businesses face in rural areas are different than they are anywhere else. And I think you've already, in your testimonies, you guys all turned in, cover a lot of that, but I wanted to cover a couple more things, a little more detail. CDFIs, obviously a very valuable tool, flexible. They provide technical assistance for people that are, when I was a geologist, so when I first wanted to start the brew pub, I honestly didn't know what the word pro forma meant. That's how clueless I was. I had a master's in geology, but no background. In 2020, CDFIs originated almost $6 billion in financing in rural areas. And I think it's a win-win. It allows the banks to meet their Community Reinvestment Act obligations, but it also is very powerful for those communities where these businesses can expand, where they get the investment and can expand. So Ms. Lank and Mr. Barber, are your banks partnering with CDFIs? Is that partnership as an effective and efficient way to meet the investment needs of small business in rural America? I mean, is that, do you think that is worth all that effort we put into it? And what benefits from these partnerships do you see?
We currently do not partner with them, but that is something that is being discussed and worked through right now at our bank.
Same with us. We don't locally have access to something like that right now, but on my ag committee with the independent community bankers, we have been discussing those topics to see how they could fit in with all of the community banks in the nation.
Right. Well, I think that part of the reason I asked the question is you're the majority, you're not the minority in rural areas, and yet I think they bring so much value, especially to the communities, and you guys are community banks. In essence, that rising tide, I think, affects everybody. And I want to talk a little bit about AI and marketing with Mr. Luse. You could take this. The rural businesses are always looking for a way to innovate. They want to incorporate new technology, AI, the newfangled software, whatever they can do to help in their efficiency of outreach, help in innovation of how to serve their customers better. As small businesses consider adopting new technology and getting involved with AI and other tools, how should they decide when to partner with other businesses to address their challenges or when to build their own expertise in-house?
That's a great question. I think it comes down to capacity of the business and whether you're able to build that expertise in the business. And as a digital marketing agency, clients come to us because they don't have the expertise in-house to build a high-quality website or go through all the complexity of meta ads and Google ads without wasting their money. So I think it's a decision each business probably needs to make based on how comfortable they are developing those skills. It's pretty easy for a lot of AI to just try it and not rely on it too much, make sure there's a human checking it. But we use it in our daily work all the time. It's been built into a lot of the advertising platforms for a long time. But we use it to speed up some of the slower processes of research and things like that, doing some of the legwork that you would spend a lot of time researching online. But we don't, I wouldn't say we rely on it. We just use it to kind of enhance what we're doing.
Right. So, and I understand marketing also, putting the metrics on how successful your marketing is always, there's so many variables, very hard to do. The entire time I was in business, I knew for a fact that I was wasting half the dollars I was spending on marketing. I just couldn't tell which half. Yeah. As the cliche goes. Ms. Lank, when you look at the variety of businesses, all sizes that rely on technology that exposes their customers to some level of cyber risk, and in so many rural businesses, they lack the expertise and the experience to ensure that they're protected against cyber threats. When supporting rural small businesses, how can local banks, like your bank, and Mr. Barker, you could answer this as well, how can they help businesses secure and protect their data, the data of their customers, their financial information?
If they don't have any expertise on staff, definitely hire a third party. I think from our perspective, the best we can do is ask that question.
Right.
Make sure they've thought through it, make sure they have a plan. If you don't have a plan, you can't really do anything. So that would be the only advice I could come up with.
That's good advice.
And that's where we're at, to the education. We have to keep informing them what we find on our side of the business and asking them the questions, what are they doing to protect themselves, and give them examples of what we discover in our daily lives.
I'd love to add that I don't know if this is at every state, but the New Hampshire's SBDC has a cybersecurity preparedness program for small businesses, and they do free assessments for small businesses and training.
Interesting. Mr. Menke, the only one who hasn't answered that question, you want to chime in at all? As an opinion?
Well, yeah, I really don't have anything additional to add, so thank you.
Okay. Great. I yield back to the chair.
Thank you, Senator Hickenlooper. So in my opening remarks, I talked about the field hearing that we did last Friday in New Hampshire. It was focused on how we can help small businesses lower their energy costs. But one of the things that one of the witnesses said really struck me, because he said, he was talking about USDA's grant programs. that are targeted to small business, and I think it's true of many other grant programs we have. He said, these are reimbursement-based grants. The work needs to be done upfront, and the federal cash comes in later. It's often difficult for our small businesses to front the cash, and that's a challenge. So I know, Mr. Luse, you received a REAP grant, which operates exactly that way for your solar panels. So can you talk about how you dealt with that piece of it? And then I'd like to ask each of the rest of you if you have, and you may have thoughts about this too, but if you have any ideas for how we should be thinking about that problem that small businesses have.
Yeah. So for the solar panels, I received a federal loan, federal low-interest loan through our CDFA.
So it wasn't a REAP grant?
No, I'm applying for a REAP grant for the geothermal, but I have to show proof of funds for the REAP grant.
Yeah.
And geothermal is expensive. Like, this project might be $300,000 or $400,000, and I'm a small business. So, showing proof of those funds and then actually spending those funds is pretty difficult to do for a small business. I think the federal loan that I used for the solar panels had milestones where they reimbursed based on milestones of the project. Even in that case, I had to go to my bank and get a line of credit to cover some of those gaps. And that was a smaller project than what I'm looking at with the REAP grant. So I think it would be much easier for small businesses if they had some sort of milestones like that where they paid out a certain amount at the beginning of the project, and then when you met a certain point of the project and showed that you'd completed 50% of the project or something, you get a little bit more, and then you don't get it all until the project is complete. I think some arrangement like that might still create cash flow challenges and capital challenges for the smallest businesses, but it would be easier to deal with. Like, I don't know that if I went to my bank and said, I need $400,000 to cover this and to this newer technology that isn't utilized very much with geothermal heating, I'm not sure how they would collateralize that. I'm not sure that it would be something they'd be willing to take the risk on and go through all the trouble of underwriting a loan like that for a short period of time to bridge that gap.
So it has the potential to be an issue for you as well.
Yes, yes.
Ms. Lank, and then I'm going to ask if each of the other panelists would have any ideas for how we should think about addressing that.
Sure, thank you very much. It's definitely a problem that needs to be fixed. We've had several projects that we've looked at who have struggled with this because the problem is, I mean, you know what the problem is, but for a USDA loan, you've got, the equity has to come in first. So if you're not getting it until months after the deal's closed, I mean, yes, it's free money, but, you know, if you can't front that money, it doesn't help you be able to close your loan at all. You know, there's a lot of people that use bridge lenders, but they can be very expensive. Someone had suggested an SBA loan, but that's not what SBA is designed to do. It's not for short-term financing, it's for long-term financing. So I don't have a great suggestion, but it's definitely something that needs to be worked on. Thank you.
Thank you. Mr. Barker, do you have any thoughts about that?
Well, that's been one of the frustrations in being small-town Iowa. It just doesn't make sense for any project that we have. And so the minute some of these requirements are known, it just stops the discussion right there, and we have to go a different direction and get it done another way.
And Mr. Menke?
Just going back to Mr. Barker's principle of the best solutions are local, sometimes utilizing our revolving loan funds within the state can be potentially options in these situations.
Well, thank you all. I agree. It's clearly a challenge that we've got to think about how to address if we're going to help our smallest businesses. Senator Kennedy.
Small businesses, rural and otherwise. Being against rural small businesses is like being against golden retrievers. I mean, so I thank you for being here. I have a couple of questions related to that in terms of how our small businesses, rural and otherwise, might be struggling. Secretary Menke, you're an expert in agriculture, obviously. Some people in Washington have argued, not particularly persuasively in my opinion, but this is America, they have the right to their opinion. Some people in Washington have argued that food inflation has been caused by price gouging by our grocery stores. Do you believe that?
That would not be my argument, no. Inflation has impacted everything, and you started talking about disasters. I mean, when we found farms who had their properties wiped off the face of the earth by a tornado, and they had just maybe spent a couple of years, only in the last couple of years, looked at their different insurance coverage, we found that the price of everything has gone up dramatically. So I would not assign blame to the grocery stores.
Okay, well, let me ask you, because I don't know if you will know the answer or not, but when you go to your local grocery store and go buy a banquet frozen fried chicken TV dinner, what are the margins like for the grocery store? Are they making like 100% profit? Or is it more like 2 or 3% because the competition is so great among grocery stores?
I don't know exactly, but I'm guessing it's closer to the latter.
Okay, all right. I'll give you one person's opinion. This inflation that we have experienced was made in Washington. And I don't hate anybody. I look for grace wherever I can find it, but part of our job is to call it like we see it. And I think the Biden-Harris administration has been an inflation machine. I've never seen anything like it. Worst bout of inflation we've had in 40 years. Now, we're doing better. The inflation's down, but all that means is that the rates are not rising as quickly as they were. The prices are not rising as quickly as we were. So we're having disinflation. But that doesn't help with the real problem. The real problem is these high prices are permanent. Just because they're not going up as quickly as they were, people are still paying the high prices. That's the difference between disinflation and deflation, as you know. How has this job-killing inflation impacted rural small businesses? Well, maybe we start down here.
Senator, it's a mess in Iowa. What I'm familiar with, we don't have any workers that are working anymore. I used to have a job opening and get 50 applications for a position in a bank. I advertised for 2 months and I got 3 applications. One did not respond when I requested an interview. The other 2 ladies are over 60 years old and willing to work.
I'll stop you because I want to hear.
Yep, go ahead. But it's a problem with workers. We don't find the workers, and the cost of living is
Ms. Luse, I wanted to give everybody a chance.
Yeah,
Thank you for that, sir.
I think in my world, remote work and shortage of labor really kind of blew up our labor costs. All of a sudden, somebody doing web development in New Hampshire could work for a San Francisco wage from home and pay for cost of living in New Hampshire. So that was a big adjustment for us during COVID and after. I think we've compensated with just having a great place to work that people want to work at, and it seems like some of that's leveled off, but it was pretty difficult to find people, and that's our biggest expense is our people.
Okay, Ms. Lank?
From what I've talked to, the people I have talked to that have small businesses, everything costs so much. Like every single thing you buy, a ream of paper, pens, it's also, sometimes it's almost impossible. And a lot of small businesses have closed. I've talked to a lot of people that own restaurants, and the food costs are so high that they can barely make it. So I'm not the inflation expert, but that's what I've seen.
Okay. Thank you all for being here. Thank you, Madam Chair and Madam Vice Chair.
Thank you, Senator Kennedy. Senator Ernst?
Yes, thank you, Madam Chair. And again, thanks so much. I'm going to talk a little bit more about rules, regulations. Mr. Menke, I'll turn to you. Recently, the Occupational Safety and Health Administration, OSHA, published a proposed heat rule. And OSHA estimates the proposed rule would affect millions of small businesses and employees. And so I'm just concerned, that's just one example of many, many rules that have been pushed out by this administration. And I don't know that the administration is properly considering small businesses when they are publishing these rules. They're not taking a look at the unique needs of small businesses. So I've heard about this particular rule. It's just one example. I've heard of many other examples coming from Iowans. In your current role, how has increased regulation and red tape affected the agriculture industry in Iowa?
Well, we see it every day, and the ag industry is already subject to plenty of regulation, and the list keeps getting longer. We've got EPA's rolling out its herbicide strategy and pesticide strategy under the Endangered Species Act. New regulations that are going to be very costly, complex, and with very few compliance options. We're also concerned that some of the tools that we have to be able to use are being taken off the table, with the label registration for over-the-top dicamba use unlikely to be completed for this 2025 growing season. So new regulations and red tape need to be considered very thoughtfully and seriously, as adding new layers of compliance and taking important tools off the table can become a direct time and cost burden for our producers. One of Secretary Negg's biggest priorities is the future of agriculture and promoting careers in agriculture. And if farming becomes too costly, cumbersome, and limited due to government regulations, we run the risk of driving future farmers away from the field. And make no mistake that over-regulation impacts the small farmers the most and the new and beginning farmers the most. So, and important to note that the cost of production continues to go up, and regulation and red tape is a part of that. That will eventually make its way to the cost to the consumer. And we're seeing that now in California with Proposition 12, as cost of pork has skyrocketed due to that regulation. So we are blessed with the safest, most abundant food supply in the world. That's something we should never take for granted, and we don't want to put that at risk.
Yeah, certainly. Thank you for that. Iowa is home to over 89,000 small family farms, and I was blessed to grow up on one of those small family farms. And my fear is, with the overregulation coming from the federal government, and I think we can all agree, we all want to be safe with our activities on the farm, but overregulation, it is going to drive these smaller farms out of business. They're just not going to be able to comply with all of the standards that the federal government is laying down on them. It forces them to sell. And I hear from federal government all the time about big ag and big ag industry and how awful it is. But that, unfortunately, is what this federal government is driving us to. So I think we need to consider our small family farms as small businesses, and we need to consider the level of regulation that is heaped upon our small farms and our small businesses. So thank you for that. And let's see if we've got maybe some other questions. Oh, yes. Mr. Barker, I'm going to go back to you just for a final question, just very briefly. In your testimony, you stated your bank represents millions of assets and often has to navigate the same rules as larger banks. We've kind of touched on this. But again, keeping in that regulatory theme, how do those regulatory requirements disproportionately burden community banks in comparison to the larger banks? And how do you see that get passed on to consumers?
Well, it affects us in our costs. We have similar costs to the larger banks, and so it affects our operating budget. And when it affects operating budget, it has to be passed on with higher interest rates on loans, lower interest rates on deposits, maybe fees on deposits that we don't normally want to do and can't. So it stretches us very thin. But eventually it could filter down to the customer.
Yeah, oftentimes, again, just sticking with that theme, the regulation that's pushed out from the federal government, when we don't consider the size of the business or industry,
Right.
it's very harmful. And we
Yes, it
lose
is.
more of our smaller banks, our smaller businesses, and our smaller farms. And again, just want to thank you all so much. This has been really helpful for me, understanding the different dimensions from USDA and SBA. And thank you very much, Madam Chair, for convening this great panel today.
Well, thank you, Senator Ernst, and to all of our witnesses. Thank you so much for joining with us and sharing your expertise and your experiences. I hope that you will stay in touch with either members of the committee or our staffs if you have thoughts about your efforts as you're looking at Mr. Luse growing your businesses, the rest of you as you're working with small businesses and thinking about what we might do that would be more effective and efficient. Let me point out that the record will remain open for 2 weeks for additional questions and statements. And with that, the committee stands adjourned. Thank you all again.